Good morning. This is Larry McMillan with a stock market update on Monday, October 27th. So the market broke out to a new all-time high on Friday on a gap move upwards and then continued to do the same thing again today after some positive news on the China trade talks over the weekend. So this is a clear upside breakout. Should be pretty strong when you gap to a new high. That's usually an indication that you're going to have some follow through. Our technical indicators are mostly in agreement, not 100%. But it does go to show once again that the SPX chart is the main thing you need to follow because it was remaining bullish over the last couple of weeks, merely from the fact that it did not crack support at 6,500. That support held, and now people who bought near there or anywhere in there are being paid handsomely for their purchases. Just a quick review of the other indicators. Breadth has been strong again now, just the last couple of days, and so the breadth oscillators are on buy signals. But perhaps even more important is the cumulative volume breadth, in other words, volume on advancing issues minus volume on declining issues. That's made a new all-time high, both in terms of the New York Stock Exchange data as well as our optionable stocks only data. So that's really strong confirmation of the new highs by SPX, and we're just not seeing any negative divergence here. There's a couple of negative signals laying around. The put-call ratios, equity-only put-call ratios, generated sell signals about 2 weeks ago. They're still on those signals, although they did begin to start to roll over on Friday. So we'll see if they maybe perhaps roll back to a bullish state there. The McMillan volatility band sell signal that was issued is still in effect because the modified Bollinger Bands are so far away from current prices, but it's not doing well. New highs continue to outnumber new lows on the New York Stock Exchange. That's a positive indicator. VIX has dropped all the way back below 16, so that completes a rather nasty round trip that it had over the last couple of weeks. But there are two positive VIX buy signals in place. Now that's buy signals for the stock market. One is what we call the VIX spike peak. VIX spiked up and back down again. And the other is the trend of VIX. VIX is trending lower, so that's positive for stocks as well. Pretty much everything is lining up, right now. We'll have to see how things work out later on, but there should be support at the old highs at 67.50, and any retest probably won't carry below that, at least not in the short term. I invite you to visit our website, take a look at the various indicators and newsletters that we have. We just wrote a rather lengthy article on volatility, the volatility indicators, and what happened in the last couple of weeks as to what it really means for the market in general. And meanwhile, have a great week trading.